This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, July 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at September corn down a penny and 3/4 at 3.90. August soybeans are down a penny and a quarter at 9.66.5. And September Chicago wheat was down a penny and a half at 5.22 1/4. This morning we had some export sales announcements. 100,000 metric tons of corn to Colombia. That's for 25. Also announced 140,000 metric tons of corn to South Korea for 25. And 136,000 corn to unknown destinations also for 25. Lastly, we saw some wheat sales, 100,000 hard red winter wheat to Nigeria for 25. Weekly export sales were out this morning. Real solid week for corn. 340,900 for the old crop, almost 1.9 million for new crop, which was well above the top end of the estimates there. Soybeans, 349,200 for the old crop, which was top end of the range. 429,500 for new crop, which was in line with estimates. Wheat sales were positive, 592,100. Meal, 77,100 was a little light on the old crop. 132,000 for new crop, which was in line with estimates. And on the oil side, we had 2,500 for old crop and 600 for new crop there. Good morning, guys. Lots going on. We got a South Korean deal. We got some harsh rhetoric overnight with India and Russia from President Trump, and we're bumping up against that August 1st deadline. So it's going to be interesting to see what shakes out here in the next 24 hours. It looks to be that really only China is appears to be getting an extension of the tariff deadline. So that'll be interesting to see. No weather threat. Starting to see some cooler temps show up here this morning, and certainly looks like the next 5 to 7 days are pretty good on the weather side. Dollar's been rallying. Fed holds rates steady. So I guess with that, let's kick it off. Justin, what's on your mind this morning? And we'll throw around the room.
Yeah, we also had big deliveries in the bean complex. So we had 1,026 meal, 84 oil, and 349 soybeans delivered. So, kind of makes sense where spreads are. If you look at these deliveries, it's very rare. I mean, usually the commercials are stopping meal, to help support crush. But you have really high crush values. To see them delivering, I think kind of tells you that there's a glut of meal. They rarely do that. I don't think I've ever seen these kind of deliveries, especially back-to-back months in meal. So massive meal deliveries. I think it kind of highlights what we've talked about, where this renewable diesel, where soybean oil is taking over 50% value of the crush. I think that's the trend. So I think we're seeing it now in deliveries. So used to be where they would deliver a bunch of oil and stop meal because meal is the highest value product. So kind of a side note, but I think that's kind of interesting to see that. You can kind of see where that's all transitioning now. So outside of that, I think these trade deals are interesting, and seeing. And we talk about China, and everybody's kind of waiting on China. I think, I watched, some of this, All In Summit, all these different speakers, Besant, Lutnick. I think it's pretty obvious that, they don't want to necessarily decouple from China, but definitely de-risk. And I think that's kind of mutual. So I think there's a kind of a mutual thing that's happening where, look, there's some things that we're not going to agree to, and there's some things that we're going to try to play nice on. But it's definitely an America first thing. And I think these deals are geared around everybody ex China, to be honest. So I don't personally anticipate a large China phase one type deal happening. I think that's in the rearview mirror. I think this is try not to go to war with each other and try to, which team do you want to be on with all of our partners? So
it's back to your thoughts of we've got to domestically figure out how to work ag.
Well, I think that, but also partner with everybody else.
Mm-hmm.
I think China, I mean, if you look at we can talk about this forever, but the demographics of China is going down. I think they've hit peak demand, and I think the growth is in other countries. And I think I think the China 2025 China First initiative, I think, has upset us, and I think we're going to partner with everybody else personally. So I think it's still optimistic. I think we're going to find demand in a bunch of markets that are not China. And I think we're going to keep growing our domestic base. So I think overall it's positive. Right now, obviously we're trading weather and, we're seeing how low we can get, going into harvest. But I think long-term, like I said, I think it was earlier this week, I think medium, long-term, quite friendly. So that's just my take.
Very good. Dustin, welcome back. What's your thoughts here this morning?
Yeah, I'm getting a lot of posts just from, Iowa having such a huge rainfall for the month of July. And, it's interesting the takes because obviously you would think that's a great thing. For a number of people talk about how, they tend to do better in slightly dry years rather than overly wet years, just depending on the ground. I think initially we have to assume that it's above average yields, right? Like that, that's the market seems to be trading. I think that's what we would expect, but there are obviously a lot of disease pressures that come from that too. So just want to see, kind of keep an open mind as we go into the month of August here of, wet years tend to produce big crops. Sometimes they can surprise us though. So we have to learn more about that as we get into these, this time where we start checking yields and things like that.
Very good. Ben, what are you thinking about?
Corn and wheat are priced to sell, priced to export. We're seeing that happen. Wheat pretty early in its marketing years is well ahead of pace. We see good sales for new crop this morning on corn. We see flash sales. That's encouraging. Doesn't mean that we're going to bounce right away. But we want to see the consistency of that keep continuing to keep coming our way. I think it's kind of like Justin said, we're trying to find out how low we're going to go here. And, but we're doing the right things, right? We're not coming up with blanks price to sell. We're doing that. That's encouraging. We're fighting the calendar right now. And, I think some of the uncertainty around our trading partners, particularly in soybeans, but love to see the good sales. Love to see that we're getting stuff sold, and hopefully eventually that leads to someone realizing that we've sold way too much corn way too cheap, and that's when you can put something together. So
very good. Ryland, new contract highs, 12 of the last 17 trading sessions for cattle. And it was interesting to see open interest was up again for feeders and fats. So feels like they're piling in there. And I guess on the hog side, the next 24, 48 hours will be interesting with these trade deadlines to see what shakes out there. So I guess give us a few thoughts here this morning.
Yeah, absolutely. I mean, cattle market just keeps on rocketing higher, new contract highs, new record highs, new all-time highs. I mean, it keeps on going here, and it looks like no one wants to be late to the party. Open interest is still growing. Obviously, we're seeing a lot of producer hedging at these levels. Put option volume was very elevated yesterday. So I think just naturally, I think a lot of people are kind of looking at it maybe the same way we are, which is that, the flexibility of the options market is really a huge advantage right now if we're going to make these huge $20 per hundredweight moves every month. Not to say that that's going to happen, but I think just the trajectory alone kind of speaks for itself. Obviously, like we're in overbought territory. We're probably due for some kind of downside. But right now, it just seems like cash market is still up. The supply is still tight. Nothing has really changed here. And now you're throwing a little bit more optimism from a trade deal perspective on it. Especially if we're going to slap some tariffs, the 50% tariffs or 40% tariffs on Brazil, I think that's still going to be really seen as very supportive to the beef market, which has been declining here. Box beef prices have been slipping for the past week, but it seems like the market just does not care. It's way more focused on the actual cattle market, the supply here, and just where everything is right now and how tight it is. So at this point, we just haven't seen a price that the market is not willing to pay yet. And as far as hogs go, definitely trade deals going to probably be more influential, especially with something like South Korea. A little bit of good news here. We've been seeing things start to stabilize, cash market stabilizing, carcass is stabilizing. We had a $2 rally in bellies yesterday. And all in all, the net sales, weekly sales this week were pretty good. I mean, we're at 39,500. So it does seem like we're starting to see some more interest, at least from an export kind of situation. So I'd say all the information is relatively positive right now. Obviously, the trade is shifting from August into October and possibly even further out now, especially with the discount between the back end of the market and the current cash price. So it seems like longs are just going to keep kicking the can down the road for right now, just waiting to see if we can, with all that's already kind of priced into the futures.
Very good. Appreciate you. You got something, Ben?
Yeah, I want to throw something in that's kind of a sidebar. I think a general warning shot for commodity markets. And that was, again, a very different market than grains, much less traded, but the copper move yesterday and how vulnerable electronic markets can be to headline or trade news. Copper got some news that was tariffs on processed goods, but not on raw goods. And it tanked the copper market violently. And it, just putting in equivalents for grains, it would be the equivalence of $1.80 break. Not that corn is going to break $1.80 because it's probably looking more, we've processed a lot of the negativity. But I think the electronic markets are much more vulnerable to violent moves and repricing events that can happen quickly when something hits the wire and there's a big position that's vulnerable, and that's happened. So it's always a good chance to take a breath and look back and say, okay, how do I sit 50 higher and 50 lower? And I think it's a good exercise and reminder that we are in an environment where headlines can really move markets and can really bite people when they're leaning too hard to one way. So I just wanted to throw that in there. So crazy move. Yeah,
no, very good. One thing to note, tomorrow is Friday. We're going to have Fun Fact Friday. Brian will be in. Never know what you're going to get, so be sure to tune in. It's always a good time. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. And we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.